Washington is doing something worth paying attention to right now. After weeks of stress in global currencies and bond markets, U.S. Treasury has now increased its own purchase of long-term government debt. The move briefly pushed yields lower, but today those yields are climbing again, and that raises a much bigger question. What if the real danger is not that the dollar suddenly collapses? What if the dollar keeps working exactly as it does now, but over time it simply buys less and less and less? Because a retirement account can still save $500,000 while the purchasing power behind that number quietly erodes. Josh Ward from Noble Gold Investments joins me today to explain how debt cycles, interest rates, currency pressure, and government intervention can eventually reach the family budget, and what history says about protecting purchasing power when the rules of money begin to change. Josh, welcome back to the Next News Network.
Thank you so much. It's so great to be here, as always.
So, Josh, Washington is now increasing buybacks of long-term Treasury debt after yields surged. We've also watched extraordinary intervention around Japan and the yen. So at what point do these fixes stop being isolated events and start telling us that American debt itself is becoming the real problem?
Yeah, I mean, we're there 6 months ago, 2 years ago, right? I mean, we just hit 40 trillion on the debt in America here, excuse me, and the entire world is laughing at us. I mean, it's insane. It took us almost 220 years to get the first trillion under our belt, and I think it was 92 days to get the last trillion under our belt. So, I mean, it shows you that the only trick the government has up their sleeve is going to be inflation, printing more money, buying back their own bonds, right? That's what we're seeing.
Mm-hmm. Now, people hear phrases like dollar collapse and immediately tune out because it sounds extreme. But isn't the more realistic danger that the dollar keeps functioning while steadily buying less? And how can someone lose real wealth even if the number in a bank account or 401k never actually goes down?
Yeah, I mean, that's what we're seeing now, right? Think about what $100,000 was worth back in 2020, right? You could buy gold for $1,500 an ounce. When it comes to real estate, it was much, much cheaper. Everything has basically doubled in the last 5 years, which is very telling to me, right? So, I mean, we've experienced the fastest pace of inflation that we've seen since the 1970s. So really, it's been 50 years since we've seen inflation like this, and I don't think it's going to stop. I think it's going to accelerate.
So the United States, they can tax, they can borrow, create money, but none of those options are actually painless. So at what point does excessive government debt stop being just a Washington budget problem and become a problem for the value of the actual currency?
Yeah. I would say when the other countries realize that the dollar is worthless and they stop trading in the dollar and they stop holding U.S. Treasuries in their reserves. And I think we're starting to see that now.
And where are we starting to see that? Where is that becoming evident?
So we're seeing that with Japan. We're seeing that with China. We're seeing that with tons of different countries that are net buyers of our debt, right? I mean, China and Japan, they own all the debt through America. So, and they're not doing it anymore. They're not buying. They're not repurchasing the debt. They're getting rid of it. It's usually less than a year debt that they hold. So they turn it over every year or so, or every 6 months, and they're buying less and less. And that's why you're seeing the government come in here and try to save the party here, right? It's unbelievable what's going on. We just had QE yesterday. That's why gold was up $200 an ounce. That's why silver was up $2.50, right? It's a direct correlation with what the Fed is doing and the QE that we just experienced yesterday, right? And we're experiencing on a daily basis now. I mean, it's not surprising at all. It really is kind of shocking, though, when you see it happen right in front of you, right? You knew this was going to happen, and now it's happening. And you're seeing the markets react accordingly.
We haven't talked about the BRICS nations lately. What are they doing, and how does that affect, that currency block?
Yeah, well, they're wanting to do business and trade with themselves, right? So they're trying to cut out the U.S. dollar. So they're trading in their own local currencies. I think soon they're going to be trading in gold and silver. I mean, it's basically the U.S. dollar right now is a hot potato, and you don't want to be left holding the bag. And all of these countries are passing along this hot potato, and again, you don't want to be the one left holding the bag here. I mean, it's really precarious where we are. The government doesn't come in and bail out bonds like we just saw yesterday unless there's a major problem.
So if inflation requires higher interest rates, but higher rates make the government's own debt dramatically more expensive, to refinance. What choices are left for the Federal Reserve and the Treasury? I mean,
Inflation.
is that where debt monetization and financial repression starts becoming attractive to policymakers?
That's exactly right. I mean, it's inflation. Our only hope is inflation. Right? The politicians, the U.S. government's only hope is to inflate the debt away, right? To where, if 40 trillion, imagine if we paid off all of our debt tomorrow, right? The inflation that we would have, right? I mean, we're just going to inflate the money away. That's the only trick that the government has up their sleeve is inflation, period. That's it. There's no other solution to this problem.
Well, I mean, inflation is the silent theft of your buying power. So, I mean, it's just a ludicrous solution.
Well, it's the most destructive tax, right? It is a tax, but you got to understand the government has printed more than they have. All of these other countries have borrowed more than they have, right? I mean, it really is a race to the bottom right now, is what we're seeing.
So what happens? Okay, so what happens next? I mean, they can't just, it's 2026. They can't just keep inflating. Eventually, yeah, that race to the bottom is going to come quick.
Absolutely, and it's gonna take other countries calling our bluff, I think is what it is. It's going to take other countries not taking the U.S. dollar anymore, not trading in the U.S. dollar anymore, and getting rid of their dollar reserves, right? Anything that they own that's paid in dollars, they get rid of it. And that's what I've done personally. It's what a lot of our clients have done, and we've succeeded from that, right? We've developed. When you put your money in gold and silver, it completely takes out of the banking sector, out of the cabal, out of everything, right? Your money's not getting lent against 10 to 10 by a bank or a financial institution, right? And that's why you'll never hear the government really be a proponent of owning gold and silver, right? They own it in their own reserves, but you're never going to hear a government come out and say, I think it's wise and prudent for the average American to invest in gold and silver and to hold some of their wealth in gold and silver.
Well, we remember when they did the gold confiscation back in the 30s, so that's a whole other topic. But let's make this personal, Josh. If someone has $500,000 or $1 million saved for retirement, and a large portion is sitting in bonds, cash, or other dollar-denominated assets, what can a debt-driven devaluation actually look like for that person over several years?
Yeah. I mean, you could see your account go up while the purchasing power goes down. And this is a concept that's kind of difficult for some people to understand. So, think about it like this. If you had $100,000 5 years ago and now it's $200,000, but your purchasing only buys you $50,000 of those goods like it did 5 years ago, you're no better off, right? You might have doubled your money, but your purchasing power has been wiped in half. And I think that's what we're seeing here, right? And the government gets their taxes. The government loves it with inflation because everyone pays more taxes because they made money, but their purchasing power is going down. And that's what we're seeing now. Everybody has more money, but that money buys less and less and less, right? There's a finite amount of goods on this earth that you can buy, and there seems to be an infinite supply of money. So you have an infinite supply of money chasing a finite amount of goods, and those goods priced in that currency is going to go up.
Well, yeah, the infinite amount because they just keep printing and printing and printing. But, America, again, they've changed the rules of money before. We mentioned 1933. Again, when the dollar's linked to gold ended in 1971. So what are the useful lessons from those periods without pretending history is guaranteed to repeat itself in exactly the same way?
Sure. Well, if we go back to the gold standard, I think it would make the country and the governments not be able to have these inflation problems, right? Because the government can't just print money out of thin air. I mean, we would go back to an honest money system in America. And I think we're a long ways from there. I think ultimately that's where we're going to go, but I think they're going to bring the hammer down and everything has to collapse before they do that, right?
Oh, lovely.
So it's not looking good. I mean, you look at through every case of history, the average fiat currency, so which is what we have, which is a currency backed by nothing, just by the government's might and the military might. The average lifespan is 25 to 30 years. And we've been on a pure fiat currency really since 1971. So we're the longest standing fiat currency that has ever existed since the beginning of time. And again, it's not a good track record. Every fiat currency has gone to zero, right? When you have a currency that's backed by nothing, people become resourceful and they start holding other assets and using other currencies, especially when you take advantage like the U.S. has. I mean, our biggest export is inflation. Right? We don't produce anything in this country. All we do is we give China fake money, zeros on a computer screen, and they send us actual goods we sell in this country. I mean, it's not a recipe for success; it's a recipe for disaster. And
Well, I
that's
mean,
what
look at Zimbabwe. I mean, didn't they have like $1 trillion note or something
hundred
crazy like
trillion
that?
dollar note, $100 trillion note, and you couldn't buy a loaf of bread with it, Gary. Right? I mean, it's going to get that serious here, right? And we're seeing it now. I mean, you can't go to the grocery store for $200 or $300. It used to be $50 to $100 5 years ago. And this is what I'm talking about with the inflation crisis that we're in currently. People are feeling it across the board. People's wages have risen a little bit, and inflation. I mean, I think personally, the prices of everything have doubled in the last 5 years.
Did
I know the government's not talking about it, and they're not going to tell you about it, but the average person can tell that the average price of everything has doubled in the last 5 years.
didn't Mexico do a currency reset on the peso like 20 something years ago? I remember there was a reset in that. Do you recall that?
I do. I'm not super familiar with the Mexico situation because they still did the same. It's not like they went back to a gold standard, right? They
Right.
revalued it, and then they're still facing the same problems now that they were facing 20 years ago.
Yeah, that would be an interesting research project to go back to that moment, look at how Mexico revalued the peso, and then look at the economic impact that that had on their economy. And of course, connecting that to the global economy, how the peso was valued across the world when they just went ahead and reset it. Because, I mean, that's what we've seen. That's the only example that we've actually seen where a currency reset has occurred, at least in my short life here. But then, of course, you have the Zimbabwe situation, which is completely different.
Yeah.
I'm,
Well, also
using,
too,
I'm using Mexico as the example because Mexico actually is a large functioning nation that has a real solid currency. So when they go ahead and do that, I think that gives you kind of a blueprint of what other nations could do. So if you apply that same blueprint to the United States, which I don't think they would do, it could give you another currency reset
yes.
situation.
The difference, I think, though, is that the Mexico isn't the world's reserve currency.
Right.
Right, that's the huge, like, nobody holds the peso for anything, right? Unless you go to Mexico. I mean, it's not like you're going to want to convert your IRA to the Mexican peso, right?
No, I don't think
so. That's the big difference here, right? It's nobody really knows. I mean, we've never really gone through this system, right? We're kind of the test case or the guinea pig for this. But I can tell you, it's not going to end well, right? When it does and how it happens, I mean, that's anybody's guess. But the reality is we're going to face a point in the near future where all of these countries are going to drop their dollars faster than they ever have, and the dollar is going to collapse. And it's going to be one of those situations where it's going to take a hell of a lot more than the Federal Reserve coming in, lowering interest rates to prop it up.
Well, and that's why people need to hedge now,
Yep.
because we've been covering fiat currency, the Federal Reserve actions for 20 years here. And, I don't want to sound like we're always shouting that there's a fire in the room, but the reality is it's pretty damn hot, and it's only getting hotter. We could talk about currency collapse and economic collapse all day long, but the reality is we're moving closer to that moment with every day they print more.
And it's like, I like to kind of use the analogy of like a drug addict, right? So 30 years ago, you only needed a little bit of QE to prop up the system, right? The government needed to intervene just a little bit, throw a few billion here or there, and to prop up the system. Now it's turned into from a few billion to a few trillion propping up the system every single time. And every time they do QE, since the debt gets bigger, everything gets bigger, the QE has to be bigger to have an effect.
That's crazy.
Right? So it really is
reckless.
It's 100% reckless, right? And all of these politicians are putting it like a noose around the neck of a future generation. How the hell am I going to pay this stuff back? How the hell are my kids going to pay this stuff back? I mean, it's not going to. That's why I think the ultimate end game is to inflate the debt away, is to have inflation like we saw in Zimbabwe or the Weimar Republic or any other countless examples, to where it just inflates all the money and all the obligations away.
Well, maybe Tyler Durden will step in and figure it out. But here's the part that I think ordinary people should really take notice, because central banks, they understand the system better than almost anyone, yet they have been accumulating large amounts of gold on their own.
That's it.
So what are they hedging against that the average saver may not be thinking about?
Yeah, well, I mean, if people ask themselves, why should I invest in gold and silver? Well, the U.S. government does, right? The Central Bank of China, the Russians, right? Everybody holds their wealth in gold and silver, and in America, it's kind of a something that we forgot about. Like this current generation doesn't realize the value and the power that gold and silver have. And what did was I think it was Ronald Reagan says we're one generation away from communism,
Yeah.
right? And that's what we're seeing. I mean, I hate to say it, but it's you look at the people who are getting elected, you look at the people like Mandami or Gavin Newsom, and these are the dregs of society. These are absolute retreads that have no idea what they're doing. They've never run a business, and they're in charge of the two biggest economies in the United States.
Well, you bring up a really interesting point because we are watching the rise of communism right now in this nation. And just like Reagan said, it's going to be wrapped in an American flag. Yes. They're running for office. They're winning the primaries. I mean, that's its own threat that we're facing, just alongside this financial threat. Yes. And when that financial stress hits, what's the practical difference between owning a physical asset directly and owning a paper claim, a fund share, or an account entry that depends on another institution to honor it?
That's a great question, Gary. So when you own an ounce of gold or an ounce of silver, right, that ounce of gold had to be, first of all, fined out of the ground, had to be refined, had to be assayed, had to be minted into coins and bars. It has something called intrinsic value, right? So the US dollar has no intrinsic value, okay? It's a zero on a computer screen. It's an IOU, and the government can print as many as they want, whenever they want. So when I think of holding my wealth, I don't want to hold it in an asset that the government can inflate away, that can print away, and completely lose my purchasing power. I want to put it in something that's real, that's been used as money for 2,000 to 3,000 years. I mean, it's a real easy case for me, right? The average person doesn't really get this, though, right? They still have strength. Confidence in the dollar, and they think that the dollar is never going to die. But the reality is we're on our last leg. Okay, that's the reality. We're on our last leg for the dollar. And we're seeing it now with inflation. We're seeing it now with rates rising. I mean, all of the indicators.
Josh, I don't like you. I don't like having you on my show. We're on the last leg. He's just like, no. I'm like, come on, man,
Gary. Right? I mean, that's the truth of it, right? I mean,
I know, it's the truth. I get it. It's just like it's so hard to really face that. You're like, we're on the last leg. This is the end of the dollar. Like, no,
we're
please
$40 trillion in debt.
I know.
We're $40 trillion in debt. It's going to cost the U.S. government more in paying the interest on the debt than our military, Social Security, all of the payments that the government sends out. We're there. We're paying more interest to the Chinese than the government than the citizens are getting back from the government.
That's just insane. That's absolutely insane. Wow. Okay, so let's go on, because for somebody who's watching this right now, okay, who does not want to predict the next crisis, we're talking about the end here of the dollar. That person doesn't want to bet against America, but also does not want every dollar of retirement security depending on Washington managing it perfectly. So what does a sensible diversification strategy actually look like?
It's different for everybody here, Gary. I mean, for me, I'm 75% gold and silver, physical gold and silver for my own personal holdings.
Wow.
Right? For myself. And this is what I feel comfortable with. I own some real estate. I do have a few select stocks. But for the most part, I mean, it's in gold and silver. So it's not like I'm sitting here in the stock market saying this, right? It's like I'm living and breathing it here. So
wow, 75%.
And probably technically more. I mean, I just bought a bunch in the last couple of weeks. So I just bought a bunch more silver personally in the last couple of weeks, and I haven't bought silver for a while.
So what about the average guy? Like, what would you say? I mean, maybe you're special because, well, you actually are special because you track this every day. You know what to do. So, I mean, I would take you as a template. But what is the average customer? How do they diversify?
Well, I would say you're asking me the wrong question, Gary. I would say you want to ask yourself, how much do you want to leave exposed in the dollar, exposed in the stock market? Not how much do you want to protect with gold and silver, right? That's kind of how I see it. You're asking me the wrong question. And that's what I say to clients, right? When they say, Josh, you've been doing this for a long time. How much should I do? What percentage? And there's not a perfect answer. You got to ask yourself, how much do you want to leave in the dollar? How much do you want to leave in the stock market, right? For some people, that's 0. For some people, that's 50%. For some people, that's 25%, right? It's a personal question that you got to ask yourself.
And how does one come to that ultimate decision then? I mean, like, what are the factors that someone's going to say? Well, maybe 25% exposure, maybe 50% exposure. Like, what are the metrics that people would, look at in their own portfolio? I mean, obviously these are risk factors, but there has to be signals that are going to help that person make that decision. What signals do they need to look for?
What's going on right now? Interest rates,
Yeah.
the value of the dollar, right? The price of oil. The
So when
price
they
of
call you, when they call you, you can help them understand what those signals are.
Absolutely, yeah. No, absolutely. And a lot of my clients, they're taking this strategy where they're loading up on a lot of silver right now. And what they're planning on doing is they bought silver 70, 80 to 1 to gold, right? The silver to gold ratio. And when gold and silver are 20 or 30 to 1, they're going to convert that into gold. All of the silver into gold. So that's a strategy that's very popular here at Noble. A lot of my clients do it, right? A lot of clients swapped out at 100, 120 for gold. And when it hit 50 to 1, now it's 70 to 1, and you can get in and out of gold and silver.
And that's what you guys specialize in. And it's not just about, you ship it to the home, you hold it in your own vaults. They have many options here. And the number's on the screen, 877-646-5347. If you want to give Josh and the crew over there a call. They are sponsors of the Next News Network. They make this show possible. So when you support them, you're supporting us. And I really appreciate Josh coming on and breaking it all down for us.
Yeah, absolutely, Gary. I appreciate your time. I mean, I know we've been friends here for what is it, 10 years or so, or just under 10 years? Is it 9 years now? I think it's going on.
At least, yeah. You guys have been steadfast sponsors for many, many years, and we couldn't do the show without you guys.
Yeah, I appreciate you, Gary. We wouldn't be here without you, Gary. So it goes both ways.
Well, thank you so much, Josh. Look forward to having you back.
Absolutely, anytime, Gary.
All right, so Patriots, the important point here is not that the dollar disappears tomorrow. History shows something much more ordinary and in some ways more dangerous. A currency can remain the currency. The banking system can remain open and your account balance can remain exactly where it was while the purchasing power behind those numbers actually changes. And that's why this conversation matters. Governments have survived debt cycles before, markets have survived them, families have survived them. The question is whether your financial plan depends on every policy decision, every bond auction, and every central bank intervention working exactly as intended. Diversification is not a prediction of collapse. It's an acknowledgement that no single system deserves 100% of your future. So if you want to learn more about physical gold and silver and whether they may have a role in your own retirement strategy, visit nextnewsgold.com and go to Noble Gold Investments. Speak with a qualified professional about your individual circumstances. The number you see right there, 877-646-5347. Give them a call. Tell them Gary Franchi sent you. For the Next News Network, I'm Gary Franchi. Thanks for watching.